Thank you so much, Khun Paul, and good afternoon, everybody. After you have seen Khun Paul's very interesting presentation, now it's my turn, and you will see a more boring presentation because I'm an economist. And what I've prepared today, because Khun Paul has strictly instructed me to talk about the Thai, economic outlook, and also what capital inflows will be like and what the baht will be like. So I'll try to cover all that in 10 minutes. So what I'm going to do is I have a slide actually to show. I'm not sure if it's yes, that's the one. So if we go to the first slide, basically, to be honest with you, the Thai economy has been pretty resilient to the global economic crisis. We have had the floods, but we have also recovered quite strongly last year. It actually was an upside surprise to most economists, including myself, who my forecast was totally wrong at the end of last year, because our forecast was much lower than what the Thai economic growth really was, which was 6.4% last year. So for this year, given that the economy has already pretty much rebounded last year, we see that the Thai economy will still grow strongly at around 5%. That's our forecast for this year at the moment. But of course, there are now challenges which you hear a lot in the news about, capital inflows, baht appreciation, and also possibilities of bubbles, right? So that's sort of like a summary of what I'm going to talk about today. And okay, let me try to operate this. So that's the key messages that I just took you through. So just quickly taking you through last year, this is the only slide I will have with numbers from last year. So last year we see that growth was mainly driven by investment and consumption, right? Because the global economy wasn't doing well, our exports weren't doing well. So it was domestic consumption and domestic investments which were driven mainly by private sector people like all of you here. And basically, it was all supported by, first of all, we had to reconstruct from the flood, so there were lots of investments going into that. And also, mind you, there was a lot of FDI coming into Thailand last year as well. So talking about money flowing into the country, it's not only hot money, but it's also foreign direct investments that have been flowing into Thailand. And thirdly, we have also benefited from lower global prices last year because the global economy wasn't doing well. There was lots of demand. And of course, the government itself has also been stimulating the domestic economy, corporate income tax reduction, various subsidies and income supports to households. And our Thai commercial banking sector remains strong, right? So those were the positive, factors that has supported growth last year, and some of this will continue this year as well, right? Such as the increased FDI inflows that will still be strong, right? Global prices look to be, still low and stable, so that's good. All the government measures to do with corporate income tax reduction will be there. Some income support, as Paul mentioned, the Rise Pledging Scheme will still be there. The first car policy, which expired last year, true, but the cars will be manufactured and delivered, this year. So that will also help, the growth of the Thai economy as well. So, here we see that, sorry, let me go back. Okay, so here are some of the supporting factors for this year that I just mentioned just now, right? Continued inflows of FDI, and I have a graph here that shows you that FDI inflows into Thailand since the subprime crisis has been pretty impressive and has gone back to the levels before the subprime crisis. So that's a positive factor, and that will continue this year. Public investments. Public investments will also help grow the Thai economy this year as well, and I'll have some numbers to show you as well. And I mentioned the the first car program, and of course, because we're probably not going to see a big reconstruction from the floods anymore. Imports will also be low this year, so that will make our net exports contribute to growth much more than it did last year. Actually, last year it contributed very little because our exports growth was very small while our imports were very high. And of course, energy prices, look to be, remain in the low ranges, and interest rates, which I'll have graph to show it as well, is quite low in Thailand, and it will remain pretty much so, even though, there are talks about the Bank of Thailand maybe raising policy rates, but still, given that inflation is at this level, real interest rates will barely make it to the positive range. It's now negative. So with that, let me show you a bit on the public investments for this year. So the public investment that will go into the country this year, I know all of you are thinking about the 2 trillion baht. That's all over the news at the moment, but sorry, that will probably not be disbursed this year because it's just going to, it went to cabinet yesterday, was approved, and it's going to go to parliament. And then, the process of bidding and TORs and everything will then happen. So for this year, it's probably going to be the 300 billion baht water management projects that were actually approved last year, and it was delayed. So in 2013, we will probably see, around 60 billion baht of that amount. Lower than we expected earlier, but still it's 60 billion baht being injected into the economy, and it will increase in 2014 and 15, right? So this will be the public investments that will be going into the economy, stimulating the economy, and also encouraging the private sector to also invest as well. Now, I know I cannot leave this presentation without telling you a bit about the 2 trillion baht program because it's all over the news. You know that the 2 trillion baht program is actually not 2 trillion, right? It's actually 4.2 trillion. 2 trillion, the reason why they're saying 2 trillion is because those will be borrowed. Those will be financed by loans. But the whole program is actually 4.2 trillion. So the other parts will come from the government's own budget or PPPs or whatever. So it will be injected into the economy. It's a 7-year plan. To be honest with you, usually when public investment plan says 7 years, it's usually 10 or 12 years, given the capacity to disperse and also invest by the public sector in Thailand. So, but anyway, this will be a good addition to the Thai economy as well. And again, because this is focusing a lot on the logistics system, it will help increase investment attractiveness of Thailand, and probably also the private sector investments that will come after this as well. So that's the plan that is going to also help Thailand grow probably in the next few years, not this year. But there are of course challenges as well. So let me come to the challenges, which is what Paul has asked me to talk about today, which we see a few challenges for this year, and some may also extend to next year as well. Well, the first and foremost challenge is that we don't know how the global economy is going to turn out. Right now you hear about Cyprus and the U.S. economy is recovering, yes, but there's problem in Cyprus. So there's still a lot of uncertainty around the global economy, which is why I put that in red up as number 1. That's probably the most important challenge for Thailand at the moment. So our exports rely a lot on that as well. And we also now have seen an increase in minimum wages, which have pulled out our average wages in the country as well. And I have figures to show you that as well. And the other challenge would be, what we're talking a lot about these days is the large capital inflows that have come into Thailand and has put pressure for the baht to appreciate, right? And these capital inflows plus a very rapid credit growth, given that interest rates in the country is very low, right, would, potentially, could fuel some bubbles in certain assets or certain areas of Thailand as well. And of course, lastly, this political uncertainty is always an overhang there. And I know investors like you are pretty sensitive to political uncertainties. But let me tell you that for those investors who are foreign direct investors, political uncertainties are not as important for them, because when I looked at the numbers, when there are political uncertainties, our exports keep growing. FDI, will still comes because those uncertainties, usually affect, the core business district in Bangkok if there were protests, right? But factories and exports and ports, remain open. So business go as usual for those who are actually in the manufacturing sector. So with that, let me just take you a bit through the details of each of them very quickly. So as I told you, for number 1, you know that the global economy will recover slowly. And I don't know, Paul, will you be giving out these presentation later, or? Okay. All right. Okay. So sorry about all these numbers, because I wasn't sure if you will have a hard copy as well. But this is just to show you that the global economy will grow. It's recovering slowly this year, right? In 2013, the World Bank forecast growth to be 2.4% compared to 2.3 last year for global economic growth, and it will grow in 2014 and 15. And of course, China will still be a key player there, although its growth will slow down. But China growing at 8% for a large economy like China is still pretty good. It will also help our East Asia region as well. But the bottom line here is that there are lots of uncertainties and recovery will be slow, right? So that's my point on the global economy. Now comes the real wage. I don't know if you have seen these numbers. I was a bit surprised when I saw the numbers because I didn't realize that the relationship between minimum wages and average wages in Thailand was so strong. So when the government raised the minimum wages, given that also that the labor market in Thailand is pretty tight, and if you're in business in Thailand, you know how hard it is to find a very skilled person to work for you for a long period of time, right? And since April 1st last year, when the minimum wage was raised to 300 baht, the average wages was also pulled up by more than 10% for each quarter after the minimum wages rose. So this again will also put pressure on the profit margins of firms in Thailand. But I was told that big firms will still be able to manage, but it's mostly the SMEs who will probably have to adjust a lot and increase their productivity. So this is again another push for Thailand to to improve its productivity as well, whether you like it or not. So now we come to the point that many of you are talking about, many of us are talking about these days, which is the capital inflows, which is, has been coming in, big time. And of course, Kun Chanitr will tell you more about those that come into the stock market. But basically, we see that, when there's a lot of inflows, and you can see I have the figures since, I'm sorry, it's in Thai, Buddhist year, but it's basically 2010 all the way to 2012. And we see that actually the capital flows that flowed into Thailand last year, right, it's still lower than those that flowed in 2010. So there's still room to grow if you look at it in a positive light. And we see a strong correlation between net capital inflows into Thailand and the baht. So whenever there are lots of capital inflows, I'm just putting this picture up to convince you that when there are lots of capital inflows coming in, then the baht of course appreciates, right? So what happens when the baht appreciates at a quick pace as it is today? Well, first of all, people talk a lot about the impact on exports, right? They say, oh, if the baht appreciates, then Thai exporters will suffer. But when I look at the figures, what I realize is that there's not much of a correlation between the two, because actually Thai exports rely a lot more on global demand, on demands from their markets rather than the exchange rates. So you can see that when exchange rates appreciate, in good years when the global economy is doing well, the all Thai exports also increase. But in 2009, for example, when there was a subprime crisis, although our exchange rate did depreciate, right, exports fell. So, the correlation between the two is not very strong. And this just shows the point that Thai exporters are quite resilient, and they have already been adjusting, because as you can see, the baht has been appreciating since January 2003, right, from 42, if you remember back then, to 30. So over these years, Thai exporters have actually improved their productivity, found new markets, and were able to survive, the baht appreciation. So this is another strength I see of the Thai economy. So the impact of exports, maybe not a lot. Now, what about the impact on capital outflows? People always talk about capital inflows into Thailand, but if you actually look at the capital outflows, you actually see that since 2011, Thais have been investing abroad very aggressively because the baht has appreciated, right? Assets in Europe are pretty cheap, so Thais, and large Thai corporations have gone out and bought, assets abroad. So there were lots of outflows, and it's very surprising when I saw this data that actually Thai direct investment abroad has surpassed inflows into Thailand, since 2011. So this again shows the strength of Thai corporations that they're able to go out. And of course, this is also, the baht appreciation indirectly pushes firms to increase their productivity as well, right? So low-wage, labor-intensive industries will not be able to survive in Thailand. So some of the firms are actually moving out to neighboring countries as well, and taking advantage of the upcoming ASEAN Economic Community in 2015 as well. So, so this is another impact of the strong baht. What about the impact on capital flows? You see, so people say when there are capital flows, the baht appreciate, right? But actually, the causation also goes the other way around. When the baht appreciates, capital also flows in more because investors also make money from the baht appreciation, right? So this is, you don't have to really worry about this. This is basically some mathematical model that the Bank of Thailand does, and it shows that the determinants of capital inflows into Thailand are the following, and the baht appreciation actually is high up there. It has a lot of influence on capital inflows into Thailand. So please, expect to see more capital inflows into Thailand. Expect to see the baht to appreciate, and as already Paul mentioned, you can keep an eye on what the MOF and the Bank of Thailand's conversation will be like, and it seems that the baht is going to head towards a greater appreciation in the future. But what worries us probably more now is that the baht appreciation may lead to bubbles, right? One of the reasons is not just because of the baht appreciating, but it's also because interest rates are so low in the country at the moment. Right? On the right-hand side chart, you see that real policy rates in Thailand, the red, little red bar, is negative, right, compared to other countries in the region. And credit growth have been going like wild, right? We see 15, 20% credit growth, into businesses and especially to consumption, right, in the latter half of 2012. So, low interest rates, coupled with capital inflows into the stock market, making the stock market very attractive, making many Thais much richer, which I have a small graph here to show, and I'm sure Dr. Chanitr will talk more about this. You can see that actually, on the right-hand side graph, in the Set 20, it's the locals, right, who have been investing, quite a bit, holding of Thai stocks by Thai locals have been, the highest among foreign mutual funds or property trade. In the non-Set 100, the small stocks, the Thais are actually, very aggressively investing there as well, right? So Thais have lots of money, interest rates are low, right? They make good money in the stock market. Why not? They make more money in the stock market, they reinvest in the stock market or in the property sector. So that makes us a bit worried about possibilities of bubbles, especially in the stock market and in the property sector. But let me put a footnote here that I don't think there's a bubble yet at the moment, because as you can see, most of the bubbles in the stock market are concentrated in these small stocks, which have grown by who knows, like 10,000%. PE ratios are super high. So they're still concentrated in a few areas, and even for the property market as well, it's concentrated mostly in the big towns like Khon Kaen, or Kanchanaburi, so big towns and also border towns, but not so much in the overall country yet. So it's not an overall widespread bubble in the country, but there are pockets and there are signs at the moment. So we really want to to make sure that doesn't happen. So as you can see, if you were an investor and you want to come to Thailand, what is the the best asset to invest in? If you look at the returns by each asset, the stock market will give you has given you 30% over the last 3 years, right? Compared to interest rates, which if you actually deposit money in Thailand, you get very little. So actually, most of the money is coming to the stock market and some into the property sector, which is why there's some worry at the moment, and the Bank of Thailand is also quite worried about this, which is why they are not very receptive to the idea of reducing interest rates further, because that will stimulate more domestic demand and also the reallocation of people's money into the stock market and the property market. So with that, I hope I have answered what Paul asked me to do, to highlight to you the opportunities and also some of the challenges that Thailand will face in the short run. Of course, I actually like to talk a lot about the long run, but maybe for another forum, Kun Paul. So I would like Kun Chanitr